I'm Ben Bry. I'm here with Bob Morris and Charlie Peabody. It's January 27th. It's a red tech day out there. The market got deep-seeked. And we're going to start with Charlie. And Charlie, let me ask you a question before you go into it. When we look at the energy tourists, if the IPP's down 13 to 20% today, in addition to some of the other AI capex, do you think, how much tourists do you think there are in banks right now? Because we see your Citigroup, which is a fantastic call at 81. And how much money is it from chasers in banks right now?
I don't get the sense that we've seen the generalist go hog wild in buying financials yet. But they're certainly there, but they're not. No, I wouldn't say they're overweight at this point. But
Okay.
since you brought up energy and the tourists, I have something I want to pass by Bob, and I'm out of my element here. But let's play some games here, Bob. So you and I both agree that Trump can accelerate the granting of licenses and leases and make it easier to drill, baby, drill. But he can't force drill, baby, drill. You need demand. So keeping that as a backdrop, I don't know if you have looked, Ben or Bob, but the Euro Stocks 50 index, it just skyrocketed over the last month.
A good run.
And it's had a phenomenal run. And that has been all based on the belief that Trump would create some sort of peace treaty between Ukraine and Russia. And the sanctions would then go away, and that would lower the costs for a lot of the European companies, and their margins would improve and things would get better. So that's what that skyrocketing chart is all about. But Trump's not going to broker a peace without getting something for himself. And some of the people I talk to think it's cheaper for European companies to buy their energy from Russia. Trump may, as part of this deal, may force them to buy energy from the United States. So I wanted to just throw that out, Bob, and see if you had any thoughts. First of all, if it's true, and I don't know if it is true, who would benefit? Who has European links? But anyway, that's Ben. That may be why some of the energy companies were running as well.
Yeah, so that's one thing we mentioned last week. There may be some bilateral agreements where Trump tells Europe or other areas, look, you buy your energy from us and we'll go maybe a little bit easier on tariffs. Just like Ben mentioned earlier over the weekend, Colombia didn't want to take the immigrants, and then all of a sudden Trump said, we're going to put big tariffs on you. And they said, wait a minute. And he said, maybe not on the tariffs if you take these immigrants. And they said, okay, we'll do that. And so he used that as a stick to get them to do what he wanted to do. And I think you're right. I think part of the reward to Russia maybe to end this war with Ukraine is to lift those sanctions and let them produce more oil. Now, part of what's driven up the price of oil recently is China stockpiling more oil under the view that they're not going to be able to buy it from Russia, given the sanctions that Biden put on place right before he left office. And so, yes, I think Trump wants to get Europe to buy more energy from the U.S., particularly LNG. That's the big factor. And where does that leave Russia in the whole scheme of things? They can still export oil. And maybe they export to Europe. Trump can't tell them you can't export it here or there. But once you put oil in the international market, it's fungible. It ends up somewhere. And you can say, yeah, I'm shipping my cargoes to Europe. But that displaces maybe some of that oil that was coming from elsewhere to another place. But I think the one thing here, too, is you've got all this LNG exports out of the U.S. You've got another, I think it's 5.7 BCF per day of export capacity is going to come on in about a year now. And so I think the big thing is Trump wants to tell Europe, you buy your LNG from us. You buy your natural gas from us. And the beneficiaries are, again, with the deregulation and everything he's doing on energy, and we highlighted this last week, I think initially you're going to be the pipeline companies, Kinder Morgan, Williams, ET, and the Plains All American. Now, as far as what he can do in the U.S., the drill, baby, drill, we've talked a lot about this, but initially it's going to be less regulation, more permitting, which doesn't increase production day one, but further down the road, they'll be ready to then drill more when they want to, if that's the incentive. The thing I keep thinking about here is the biggest thing Trump wants to do here is bring down energy prices. J.D. Vance was on an interview this weekend and he kept getting hit as how are you going to bring down grocery prices? And his view is, look, the easiest way is to lower energy costs because that lowers the transportation and the cost to deliver all these goods. And so Trump wants to lower oil prices, period. No question about that. Now, you've got some of this shut-in production from OPEC still slated to begin to come back online at the end of March. And so I think that's definitely more likely to occur here. And maybe this big stick that Trump uses next, and this has been mentioned in the press and no secret, is to hit up Saudi Arabia and say, produce more oil and maybe increase the taps even more than what you're already planning to do at the end of March. And again, that's easier to do when you've got, maybe all this new demand and investment in the U.S. and which you mentioned in Europe, Charlie. But I keep looking at this, and Trump wants oil down in the 60s. How's he going to do that? And you can't discount the fact that he's going to pull out all the stops to do it. Oil's holding up right now, but I keep thinking in the back of my mind, what's he going to do to bring it down? Because that's the biggest thing he can do to reduce inflation. That's the biggest win he can have, period, is to bring down the cost of energy.
And I guess if you think about what happened over the weekend, I guess the market knows the weekend, but like what the significance of this ByteDance DeepSeek thing is, they're saying, hey, we can get comparable levels of performance for dramatically less compute, which means less energy. And that's why this morning we have ET down 5%. We have the IPPs down 15 to 20%. And Bob's going to talk about nat gas in a minute. But I look at this as a very deflationary event, which kind of plays into Trump's hand. And you're seeing bonds rally today. And I would guess, my view is that you'll get a curve steepener until they force the Fed to cut. And when that will be, I don't know.
Ben, you mean a flattener until...
A flattener. Sorry. Thank you.
Yeah.
Thank you, Charlie. A curve flattener. So what that means is the long end will get bought. The Fed will try and stay stubborn or whatever. And then eventually they'll get pushed down and they'll have to go lower. And then the idea is, maybe the dollar has peaked out. And that could be possible. It could be, we're not for sure. But I'm just saying that you could see that scenario play out, and that he wants a weaker dollar, but he wants to do it their way. But getting people to buy the bonds and getting energy down are probably their top two priorities, I would guess. Yeah. So anyways, Charlie, what else you got for us this morning?
So what I was going to do was highlight what I think is going to happen at the FOMC meeting on Wednesday, followed by the PCE on Friday. And I'm calling the Wednesday meet, which means that the Fed funds rate, but they have the potential to talk about further progress they've made on inflation. And if that's followed up by a benign or modestly improving PCE on Friday, then your continued rally in the long end could continue, Ben.
Yeah.
But there are a couple of things that you want to watch that could be wrinkles in this meeting on Wednesday. First of all, be aware there is no SEP. So all you have is the press release at 2 and the press conference at 2:30. And at 2, that press release will show what they voted on doing with the Fed funds, and we're assuming unchanged. So what I want to look for is to see if there's any dissension. I'm expecting no dissension. It's unlikely in a pause that you would have dissension. But here's the wrinkle. You've got 2 Fed governors, Christopher Waller and Michelle Bowman, that are vying to become the vice chair of bank supervision to replace Barr, who resigned recently. And so and they both know that Trump demands loyalty. And as Trump last week said, I want lower rates. Is there a possibility that one of those two, in order to curry favor with Trump to get appointed as vice chair, dissents and says, no, we would prefer a cut? I don't think so, but that's something to certainly look at when you get the release at 2 p.m. The second thing is in the press conference. And what I want to see is if Powell starts to talk about rents. And rents have been softening. And the Fed has been anticipating for over a year now that rents would come down quite hard. And that would rein in the inflation rate because the owner's equivalent rent is a big weighting in the CPI. The OER is a huge weighting in the CPI. If we can get rents to roll over, that would bring inflation down as well. And the reason I bring up that is something actually, Ben, you posted, and that was a tweet by Nick Timiraos last Thursday. And here, I'm just going to read his tweet. CoreLogic reports single-family rent growth was up 1.5% for the year ended November, the smallest increase in 14 years. Now, the importance of that is we all know that Nick Timiraos is the mouthpiece or the Fed, particularly when they're in their blackout periods. So the fact that he's highlighting this weakness in rents suggests to me that Powell may use that to take a dovish stance about inflation, or acknowledge that they're making further progress on inflation as rents come down. If that's the case, I wonder, and these are all wonders, if the marketplace all of a sudden starts to price in a cut in the Fed funds rate in March. So those are the things I'm thinking about when I approach the FOMC meeting. Obviously, if we do get those kind of events, there are certain things that I think will play well. Ben, you and I agree that precious metals is to be bought, so I'm playing that. Lower rates may create this short squeeze that I've been expecting in the home builders and other things that need to be financed. So if you want to play a swing trade on those, that's up to you. It also may, up until now, it's been the money centers and the capital market stocks that have done the best, the JP Morgans, the Goldman Sachs, and the regionals have lagged. But maybe in this kind of environment, we need a steeper yield curve. But if we get a steeper yield curve and lower rates, in other words, a bull steepener, then regionals could probably play well, because they've been, and there I've been recommending CFG, which is Citizens Financial, Truist, TFC, and M&T Bank is my number one of the regionals, MTV. So I'll leave it there, Ben. Sorry.
Yeah, and I'd add something. I talked to a friend this weekend who was at a conference and heard little scuttlebutt as one of the things that this administration, Basant and these guys want to do is, in essence, just think about what we saw this weekend with Colombia, right? I think Trump knew that he was going to piss them off by using a military plane. And because, look, when we usually deport people, Obama, Biden in the past, they use a civilian plane. It's much cheaper, right? And so if Trump's, we're Doge, we're serious, that wouldn't make sense to do this. So I think he did it intentionally. They took the bait, and then he put the stick to them. They had no choice but to reverse. And I think it's just like an illustration to people of, hey, this is how business is going to be done, independent of what we think this is the way to do business. Bullying people historically isn't a great strategy, but whatever. And so the tariff thing, they might be trying to term out their debt to a conglomerate of the EU and China and Japan and saying, hey, you don't want tariffs. So here's what we're going to do. We're going to need you to buy some 20, 30, maybe even 50 paper as they term it out, and they'll be bond buying in exchange for less tariffs. And so if we have the dynamic already there where bonds are turning, you could see that be something. And I agree on the Fed is that we probably see some kind of, they'll float a balloon, right? Like Charlie, right? Okay, we'll float a balloon. Maybe we're getting close to the end of QT. They have this last little bit of the TGA, right? As we approach the debt ceiling here, or hit the debt ceiling, like that money can come into the market. And I think that was one of the ideas of why the markets rallied recently, trying to front run that liquidity. And they got caught off guard by this whole the LLM thing, but that's still there. But after that, Charlie, right, the RRP's where? It's like 80 billion now.
I think it's around 100 billion, but you're right. The TGA is like 700, 800 billion now. So
yeah, there's some money there for sure. Yeah, there's some real liquidity there. So like, I think that's their last line of defense before a very volatile money market situation. And I don't think the market really understands that. It's been a long time since we've had volatile money markets, right? Like the SVB was a unique situation, but it showed you like just a reminder of how crazy things can get when money markets are like awry. And let's remember, the money markets are the most important market. People forget this because they're so boring most of the time, but it's the funding market for everything. And that's where a lot of my thinking comes, is they don't have much more of this. I don't think the global economy is in great shape. I think the U.S. economy's underbelly is a little weak, but we've had all these deficits, so it's masked a lot of that. And we'll see what he does. But he so far has been keeping a lot of his promises, or at least attempting to. And so if the Doge thing and the lower deficits, that should lead to lower bond yields. And I just wonder if, the Fed's going to be preemptive, or it will be forced by the long end, or it'll be forced by the equity market. Today's a little warning shot, but the S&P is still very high. It's not like, today was a sharp day, but we're just giving back a lot of the excess that was just put in the market the last 2 weeks.
Yeah. Also, I heard there was a lot of put selling around 5,900 last night, which means that's a level they're going to defend.
Yeah. Look, got defended. It literally tagged 590 on the SPY this morning, which was the top of the gap, or the lowest gap, because there was a couple gap ups on this move up. So we'll see. I don't think it's super obvious what to do here, but I just think that it's like, this is, if you're bearish, this would be a good sign, because it's just the beginning of kicking out the foundations of one of the major tenant or some like bull cases for the market that's been driving it. And, if you're bullish, you can say, hey, look, we gave out some air. There was too much. So it's interesting. It's a good start to the year, though. So thank you for that, Charlie. Bob, what do you got for us today? An interesting day with somehow LLMs now causing a bunch of volatility in the energy space, huh?
Yeah, I actually bought some EQT and EXE, Expand Energy, right after the open this morning. Both those stocks are down sharply. You've got the spot natural gas price back down around 3.25, below 350. You might get another severe weather front here in next week through the south and eastern part of the U.S. But I think the market now, like we talked about before, looking through this extreme winter weather and looking forward. You look at the March contract in the futures, it's 3.25. And so we had said two things before. We said, one, we thought the ceiling on natural gas, apart from any momentary weather-driven spikes in natural gas, was 350. So we're back below 350. Also, we said a couple of weeks ago, we didn't want to chase EQT and Expand Energy. And so this morning, when they were down sharply, I added to my positions there. I've still got room to add to them, but I was happy on the sharp pullback. I think about one down 5%. The other one was down about 8%. They're bouncing a little bit here. So I added to my positions there. Natural gas focused names, just given the long-term view on natural gas. And if they gain some strength on some continued cold weather, I'm in there and I'm looking to buy more here as we go forward. I'm also keeping an eye today on Kinder Morgan. Haven't added to that or bought that today, but I'm watching that. That may be the next name on any further pullback I'd look to add to that I want to build toward a full position here. Again, that's a pipeline company, not only a pipeline company, but also they have some investment in some power generation. So that's what I'm looking and watching here this morning. I was happy to see that pull back to add a little bit more to my EQT and Expand Energy.
Yeah, I think that's what seems to be a lot of guys. Things got extended. There's been a lot. I mean, look, nat gas had a nice run, right? Between the weather and then the whole Project Stargate and AI thing. And like, sometimes things get in front of themselves. And today is like just a reminder that things don't only go up. Sometimes you have chances, and it's always a little, when you have sharp moves like this, it's always uncomfortable to make buys, but like often those are where there's good spots. And
we go forward here, the nat gas, I mean, we get past this, the fear of this next cold front. You get in the March, you get into this, nat gas could be back down to $3 or maybe below here into the spring. So look, I've got room to add more. I don't have full positions yet in Expand and EQT, but I want to get to full positions. I already have a full position in Williams. That's up nicely. And I'm looking to add on the pipeline side to Kinder Morgan here.
Yeah. And look, ET's off 5% today. These names are off. I think it's like, it's a sharp pullback in on the pipelines. Those are just very stable businesses. I just think it's like, it shows you there's just a lot of people who jumped in to the market or chasing things. So we cleaned out positioning a little bit today, and we'll see where it goes from here. Anything else? Any thoughts on oil here?
No, it's interesting. Some of the big oil names like EOG and FANG are up big this morning, even though oil's off a little bit. Again, my thoughts on oil here is we got to see what Trump does. That's the thing that's in the back of my mind is, again, what we talked about before. He wants oil lower. How's he going to do that? And that's one of the top things on his list. So I'm keeping a close eye on that, keeping a close eye on these names. We'll start to get earnings here in a week or two on the E&Ps. By the way, we got earnings from two of the big service names on Friday. Nothing exciting there. The service names continue to be pinched by efficiency gains, and I'm still not a buyer of the oil field service names. I just throw that out there too.
All right, that sounds good. All right, we'll keep an eye on them and hang in there, guys. It's an interesting day, and it's going to make for an interesting year. Come visit us at wallstreetbeats.com, and you can hear more about our group chat and what we've been talking about. We are in front of this, and it should be interesting to going forward. Take care.
Thanks. Yeah, you there, Ben?